Money FM 89.3. Best of breakfast. The U.S. Market Update with Money FM 89.3.
Good morning. Welcome to the U.S. Market Update with me, Emaad, Akhtar. The S&P 500 rose on Tuesday, fueled by strong gains in AI leader NVIDIA as investors anticipated details on potential U.S. trade deals. The broad market index added 0.6% to close at 5,970, while the Dow Jones Industrial Average gained 0.5%, ending 42,520. The Nasdaq Composite, meanwhile, climbed 0.8% and settled just under 19,400 points. NVIDIA, along with other chip stocks, helped drive this advance. No surprises there. The dominant maker of AI chips advanced nearly 3%, passing Microsoft in the process in market cap for the first time since January, a big feather in NVIDIA's cap there. Meanwhile, others like Broadcom and Micron Technology rose more than 3% and more than 4% respectively. Now, to find out more about what's been happening stateside, we've got on the line Todd Rabold, CFA CAIA Investment Management Partner at Callan Family Office. Todd, good evening in your neck of the woods. How are you?
Doing great, Emaad. Thanks for having me back on.
Yeah, thanks for coming on. Fairly timely to get you on. The markets have been fairly quiet this week. I think it's pretty fair to say, after coming off a strong recovery in May. So if we cast our minds back to May, why was it such a strong month?
Yeah, so I think the U.S. economy started showing signs of solid growth. And after a weak quarter, we're seeing improvements, and many of the bearish forecasters have reduced their recession forecast to a low probability event this year. We've begun to see consumer confidence and investor sentiment begin to improve. And we're also seeing better signs of a decline in inflation. We're closer to the 2.1 to 2.5 range, and job market's still strong, and I think investors just began to get a little bit more comfortable with things in May. And if I might just add a comment around the artificial intelligence story. You highlighted it in your opening, but of course the United States is a major player, and we saw some really strong momentum in earnings reports out of that sector. Earlier this week, the CEO of Taiwan Semi spoke to his shareholders and just highlighted that demand for their chips remain as high as it's ever been. NVIDIA had a great earnings report last week and continue to see strong demand for their products. So, the use of AI tools and applications is sparking significant innovation in the global economy, and I think investors have taken notice and are bidding up the shares of that sector.
Yeah, it's a fair point. And I don't know if the OECD has come in and thrown a spanner in the works, because they've cut the U.S. growth forecast, downwardly revised it to just 1.6% this year and 1.5% in 2026. Back in March, the OECD was still expecting a 2.2% expansion in 2025. I suspect this is largely due to the fallout from Trump's tariff policy. What do you make of the OECD's projection here?
Yeah, I would agree with you. I think it is a direct result of the tariff conversation that's been going on for a number of months now. I think that when the Trump administration made those announcements, they were caused, widespread concern and confusion. But I think as we've moved through the negotiations, the tariffs that are being talked about now are not as significant or as severe as they were initially. But one of the important negotiations for us in particular to be watching is China and U.S. So they did make some progress, but they've, of course, in recent weeks, those conversations have stalled out. There's been some accusations of violating the temporary tariff agreement. But we do expect future discussions later this week. I think China is in a tough spot with their economy slowing pretty dramatically, and it would be in their best interest to get this resolved.
Yeah, there's the China issue, and then on the EU side, the EU has recently criticized Trump's intention to double steel tariffs to 50%. They said it would undermine negotiations with the U.S. What do you make of that?
Yeah, in fact, there was some news that just came out within the last few hours that Trump intends to move forward with. I think it remains to be seen. I believe it's probably part of the negotiating tactics to get the EU in a better position to negotiate, but clearly that would be a concern for the EU. And, we just have to see how that plays out.
Yeah, let's move on to fiscal policy and a tax bill that's currently in the Senate that includes cuts to social programs. What are the likely economic consequences of that, do you think?
It passed the House last week and it's under review from the Senate. There have been some cuts, and there will likely be an extension 2017 tax cuts that were implemented back then and make those permanent. This is going to lead to additional deficit spending, which I think is on margin a net negative. However, that doesn't account for any tariff revenues that the United States receives, as well as it encourages, when they factor those data points in, a very low economic growth rate, which we think we can exceed. So I think that it's important for them to come to a resolution in the next couple of months, if not weeks, and pass that tax bill so we can move forward.
Yeah, do you see deficit spending as a long-term risk to growth or a necessary strategy in a high investment environment?
Yeah, well, Emaad, you'd rather not have deficit spending, particularly when the economy is growing. I think deficit of spending is appropriate in periods of economic stability, or think back to the COVID scenario. But long term, if our country's growing, it would be ideal to lower government spending and run a balanced budget. We're not there yet, but I think the rate of growth in the deficit spending, if the new tax bill is passed, the rate will begin to decline. And, we'll have some meaningful progress in getting closer to a balanced budget potentially over the next number of years.
Yeah, fair enough. So given the current market environment, Todd, how should long-term investors approach portfolio construction today? Are you adding exposure to international stocks, for example?
Yeah, we represent clients that have a long-term view of the markets. And so the volatility that was with us the past couple of months, frankly, gave us some pretty good buying opportunities. Our investors own both domestic stocks and international stocks, but we have increased our allocations modestly to international stocks, with valuations being so attractive on a relative basis, some stimulus spending that is expected in the EU, and just general diversification, as makes sense in times like this. We also still like U.S. large-cap companies. That's clearly being benefited with the AI revolution, if you will, that's taking place today. And we really like venture capital and private credit. Those aren't places for all investors, but certainly we find them interesting in today's environment as well.
Yeah, Todd, thanks so much for deconstructing the current mood in the markets right now. It's always a pleasure having you on. Thank you.
Thanks for having me. Have a great day.
Yeah, have a great one too. That was Todd Rabold, Investment Management Partner at Callan Family Office. This is Money FM 89.3.
Before acting on the information on Money FM, please consider if it's suitable for your own investment objectives, financial situation, and risk tolerance. To listen to more great interviews, download our podcasts at audio.sg or download the audio app. That's AWEDIO, audio at the App Store and Google Play.